Sanjay, how things looking? Good, bad, ugly? Time to put money to work?
Absolutely. Things are looking very good to me because all the froth is out of the system. There's extreme pessimism on the street. There are, of course, technical factors like domestic liquidity, etc., which is plaguing the markets. But I think fundamentals have never been so compelling as they have been in the last 6 to 9 months.
Sanjay, you were just talking about as to how the froth is now getting off the system. Does it seem like for the mid-cap end of the market, though, this could just be the start of it?
Start off in the sense correction or, sorry, I didn't get you on that.
Yes, the selling, that's right.
No, absolutely not, because I think the mid-cap correction is done with. In fact, what I find, there's more risk in the market to some of the places which are safe havens where people have been hiding, in particularly the large institutional investors. I think those are more vulnerable than some of the good quality mid-caps, because if you look at it, good quality mid-caps are already trading at something like what Sensex was at 10,000-12,000 levels, in terms of valuations. So I don't see any more corrections. But what I said, there are domestic liquidity issues, margin calls, etc., with regard to certain specific pledge stocks with NBFCs, banks, by large HNI players, etc. Other than that, I don't see any other reason why genuine investors, institutional or otherwise, would come in to sell their good quality mid-caps anymore. No, I don't think so.
Sanjay, let's look at absolute numbers here. Now, for this current calendar year, foreign institutional investors have pumped in about $7 billion and markets are down. In last 10 trading sessions, F&O and cash market combined, foreign institutional investors have been net sellers to the tune of about $500 million. That's it. And markets are down by about 3.5%. So obviously, more than global investors, the local investors or the local traders are rather nervous.
That's actually the point, Nikunj, I'm making, that, we are a victim of our domestic problems. And those domestic problems, I've probably repeated this word 5 or 6 times in the last 2 minutes, it's got to do with liquidity. People are really trapped in the sense. We're getting into a, spiral where because of margin calls, people are having to sell their good quality stocks, particularly mid caps. Some of the people, of course, were over leveraged. So it's a combination of these factors which have contributed to this. And then obviously, budget expectations, because Mr. Chidambaram was presenting a budget, we were expecting a bit too much, some kind of, a magic act coming out of his hat. A combination of these is what really has, led to square off of positions. And more so because if you notice the fact that globally there isn't a problem. We've been, talking so much about this sequester, etc. But it's not affected US, it's not affected Europe, and we are the only ones who are, talking about sequester and Italian elections. Everything is normalized across the world. So it's purely local problems, local also because of domestic investors, local mutual fund redemptions, unwinding due to risk aversion by HNIs, unwinding due to risk aversion, and a combination of liquidity problems of HNI and high net worth investors.
So Sanjay, what do you think could enthuse that confidence in the markets? Do you think month end the RBI perhaps is going to make a move in terms of some more easing in terms of rates, and do you think that could provide some fillip to the market?
I think the sentiment will change. In fact, I've been saying this in conversations with a lot of people, and probably I'd had this conversation with Nikunj also offline when we were talking last week, that it's not the budget that I was ever looking at. I'm looking at the budget session of the parliament, meaning as to what all happens during the budget session, because there is a big economic legislation agenda that is lying there, and some of the critical bills, insurance, pension, etc., that are lying pending in the parliament. Also, the finance minister has made it very clear that he will be coming out with some more announcements in the parliament to boost the investor sentiment. In the last 3 days, he's gone and recorded every public event and every public interaction that he is working on setting right the sentiment, which would include, which he specifically said, measures by SEBI, measures by various other regulators and bodies. So I think a combination of these two factors, all these factors, is definitely going to lead to the sentiment turning. And if RBI does take action, like you asked me, around the middle of this month to sort some liquidity issues and, of course, a rate cut, I think sentiment would get back to normal. What makes me very optimistic is that the valuations have turned compelling across the market, particularly so in good quality mid-cap stocks. and I don't see any reason why they should fall any further.
Sanjay, offline, I also remember we discussed some names. Shall we discuss them online now?
Nikun, sorry, I normally avoid, talking about positions publicly, so wouldn't want to really get into that, but the ones where I don't have positions, I would be happy to comment about them.
But broadly, last time when we interacted, you told me that you are selling some of your key tactical positions, your trading positions. Are you fully invested now?
I am invested now, but of course I have been equally a victim of unwinding some of my positions due to the, liquidity issues and a lot of other, stop losses being triggered, etc. But I'm in a constructive mode at this point of time. I'm not negative anymore as I was when I spoke to you last time towards the middle of January or third week of January, whatever it was. And I think now is the time to slowly start building a portfolio. There is no reason to fear any further damage in the market. If there is, that will be an opportunity to buy aggressively. So what I'm trying to say is that if markets do go down further from the current levels, another 50, 100 points, people shouldn't get worried and panic. People should actually start buying, because this would be once in many years opportunity to buy good quality stocks. I think I've made this comment to you, and I don't have a position in the stock, so I can obviously say it. Something like a JSPL, a company which would generate, in my opinion, something like 2,500, 3,000 crores profits in the next 3 years. If that kind of company is available at these current valuations, extremely healthy balance sheet, no issue of over leverage, a company like Saw Pipes, I can name innumerable companies which you should be investing in, good quality managements, clean balance sheets, not leveraged. I really don't know when you will get an opportunity to buy into some of these stocks as what they are available today, and if they fall further, have no fear, because that's the time to keep building a portfolio.
Sugar, that's one pocket of strength this morning. Sanjay, talks have only been going louder and louder for many months now that perhaps decontrol for the sector is going to come about. Does it seem like these are just trading moves, or would it make sense for genuine retail investors as well to put money into sugar stocks?
Aisha, frankly, I think you and Nikunj know my views on these issues. Anything that concerns the government policy action, and particularly price-sensitive policy action in terms of sugar pricing affecting the masses in general, and that, playing to the political gallery, blah, blah, blah. I don't want to invest in those sectors, because policy decisions are not influenced due to economic factors or due to normal fiscal prudence, but are influenced because of other reasons. I don't like those sectors, barring, of course, some trading plays. One might want to get in them and, rent those stocks to make money, but I would not like to own those stocks, no way.
Sanjay, I may sound slightly repetitive with this one, but I just want to extend the point what Aisha flagged up. What could change, or what will change for Indian markets in the next 3 to 6 months? Because if I map the environment, the macros are unlikely to improve in a hurry. Earnings have not bottomed out, and inflation is stubble. So at a time when you are making a case that it's time to put money to work, I don't see there are too many triggers on the horizon.
I disagree with you, Nikunj. I was reading this morning, and I've been flagging this to you, and probably I've emailed this to you also. We are one of the worst performing markets, YTD, at par with Brazil and some other markets. But we still have growth. Even if you take growth sub 5%, we have growth. We have a very healthy consumer balance sheet across the country. There is tremendous opportunity in the country in terms of demand. We are not looking at any sector, I can repeat that, any sector where demand has been totally satiated for products, capital goods, capex or anything. All we need is money flows to come in a right environment. And I'm reasonably confident in the next 6 months the environment will slowly start to improve. We've already seen some improvements, may not be tangible enough, may not be quick enough as what the government has been serious about since September last year. But I can tell you one thing that, barring the budget, which in my opinion was reasonably okay, barring the expectations that were built up, I think the government is in action mode in sorting out issues. So if economic legislation goes to the parliament, number one. Second, RBI starts to take action. Third, inflation, I agree with you, inflation is very stubborn at this point of time and has been for many months. But by maintaining a tough stand or maintaining a hawkish stand, RBI has not managed to control inflation. In fact, RBI has probably gone and added to the issue of killing growth. So I think that realization is dawning upon the policymakers, and RBI will now start easing slowly and realizes that growth is turning out to be a priority. Yes, inflation is top priority for them. So I'm pretty certain that these three factors, combination of legislation, government policy action other than Parliament in terms of easing investments into India, project clearances, RBI, actions, combination of these three factors, and also, there is no other option but to come and invest here by large flows from overseas, whether FDI or FII, in an economy which will grow, if not at least 5 or 6% in the next 2 to 3 years, even a worst case situation. Where else will the money flow across the world? Sentiment, is pretty fickle, because just the day before the budget, we all thought, Mr. Chidambaram's budget and everything would be gung-ho. After that, even I thought probably we'll get a 100-point rally in the Nifty. And the day of the budget, we had it all other way around. So sentiment just changes. One doesn't know. Few policy actions and the sentiment will change.
Sanjay, many experts on D Street are of the view that it is time now to bet on industrials. It is time now to bet on companies, sectors or group of stocks which will benefit when the investment cycle will pick up. And Finance Minister also has alluded to an environment where the investment cycle needs to pick up. So are you also of the view that it is now time to revisit machinery stocks, names like BHEL, Crompton, the Thamaxes of the world?
100%. That's exactly what I said when I opened my discussion with you, that what worries me is that people who are hiding in safe havens, that is the, defensives, I think they are the ones who need to be worried about right now and have to understand as to when they need to start aggressively reallocating out of the defensives and into sectors and stocks that you mentioned. And just two examples I gave you which just came to my mind was one was JSPL, for instance. And similarly, there are many other stocks across the spectrum which you can invest in, some of them you mentioned. So I do agree with you, it's the time to bet on manufacturing. And an important point which has got missed in the budget fine print and all the, negativity that surrounded what the finance minister said, things are not negative. And I think the most important point was the investment allowance reserve announcement. See the kind of benefit that goes to corporates that are deploying money in the next 2 years. So I think that's one of the steps that will encourage fresh investments coming into the system. I mean, in terms of coming into the Main Street, in terms of capex, etc. And that will boost, obviously, growth, productivity, employment. It obviously has an effect down the line.
Sanjay, we've discussed two stocks, JSPL and Jindal SAW. Do you have a price target for both of them?
I don't. Like I said, JSPL, I don't have an investment. Jindal SAW, probably I may have a small investment in it, but JSPL, I don't see any reason why the stock should not be 3x from the current levels in the next 2 to 3 years. I am not invested in it right now, but I am going to invest in it soon at the right opportune moment. These just came to my mind because you mentioned and we discussed them offline also a few days back. So there are many like these. I'm not really pushing these two, advocating these two in any manner, but people need to do their homework, look at balance sheets, look at opportunities like this, and you'll find many because I really can sit down and make a list of 50 stocks that will give you 2x, 3x kind of returns in the next 2 to 3 years. 50
is a stretch, Sanjay. Let's nail it down to 3. I'll keep it very simple. You've got 50 ideas, give me 3.
Because I don't want to really,
with a proper disclosure, because you
get into this business of.
No, the reason why I'm insisting on stock ideas is because you're making a strong case that it's time to put money to work. I just want the retail viewers to benefit from your wisdom.
Look at good quality stocks in the manufacturing, capital goods, those industries. Just pick up the top names, pick up top 2 names across these sectors, and just remain invested. Don't worry about this noise about the budget and the next morning, Italy, and the day after that, sequester. I hadn't even heard of the word sequester myself about 2-3 months back, what that meant, and I've been trying to read as to what sequester means. But, what does sequester matter to JSPL's health. I don't know. I have no answers for that. So, let it be.
Okay. Fancy words there. Sanjay, good chatting with you as always. Thanks for taking time out and joining us today.